Bitcoin hovering around $63,000 today as volatility for the asset escalating as investors question when the Fed will begin cutting rates. We're actually seeing a move to the downside in Bitcoin here, but it's still up over 40% so far year to date. Joining us to discuss, we have Anthony Pompliano, Pomp Investments founder. Anthony, thanks for being in studio with us.
Absolutely. Thanks so much for having me, guys.
So we are seeing obviously a lot of volatility around Bitcoin, but still at 200-day moving average highs. What does it tell you about the momentum for Bitcoin moving forward?
Yeah, I think that a lot of people get distracted by the day-to-day price, right? It's a volatile asset, but really the volatility of it is the US dollar exchange price. So it's how many dollars are people willing to depart with in order to get a Bitcoin. But what we have continued to see over the long run is that Bitcoin is probably the most desirable asset in the world. And so people around the world continue to buy this thing, and that's why you're seeing that 200-day moving average, right? Kind of these longer-term trends continue to go up. And now with the ETFs getting approved, you not only have retail investors, family offices, a couple of corporations, now it's coming out that some of the largest RIAs, Hightower just came out and said they bought some Bitcoin. There's sovereign wealth funds, many others that are all trying to buy this thing. So I think that it's a really, really good long-term tailwind at its back.
So you talk about the fact it's a great long-term tailwind. Then where does the price go from here? We're waiting for maybe that future catalyst. Then what is the next thing that's on the horizon?
Well, the Federal Reserve is the greatest Bitcoin proponent possible, right? Because they're going to continue to debase the dollar. And so if you watch that same thing like real estate, right? Real estate in certain markets can go up or down in a month-to-month or year-to-year basis. And so if you're kind of short-term oriented, you're likely to maybe mess up. But if you buy real estate and you hold it for 20 years, very few places in the world have you not seen that real estate go up in value. Same thing with Bitcoin, right? It's got these sound money principles. It's outside the system. No one can create more of it. And it's priced in dollars today. And so if all of a sudden the dollar is losing value, and it's only 21 million Bitcoin, somebody is going to have to pay you more dollars in the future to buy that same Bitcoin. And so I think that it really incentivizes long-term thinking. And so the people who are short-term oriented or trying to trade, it's an 80 vol asset, right? I mean, good luck. And so buying it, just holding it and waiting is probably one of the best strategies.
Well, I want to talk about the Bitcoin ETFs and some of the outflows and inflows that we're seeing. Obviously, record-breaking outflows for Grayscale to the tune of almost $17.5 billion. But I know they did just recently have their very first week of inflows, so congrats to them. I wonder what story that tells you. Is that something idiosyncratic to Grayscale, or is that indicative of maybe more institutional money coming into the space?
Yeah, look, I think that they knew by not lowering their fee to be competitive with everybody else that people were going to leave. And the calculation was how many people are going to leave and what is it going to make up for in terms of this fee. Now, what's really interesting is their market cap of the AUM that they have is much higher than maybe everyone expected because the price of Bitcoin is up 50%. Right? And so all of a sudden you're seeing that fund continue to grow in size, and that's really blunted a lot of the pain of those capital outflows. Now, what I do think is interesting in terms of the inflows is you got to ask yourself, like, who's buying that, right? If there's these other ETFs available, it's unclear. And until we know who that is, you really can't kind of analyze it. But I do think it speaks to this larger story of like fees matter to a degree, but actually when you're looking at an asset that goes up hundreds of percent, the difference between 50 basis points and 150 basis points, it's material, but really the decision is, did I allocate or did I not? That's going to ultimately drive most of the return that you're going to experience.
And give us just a better sense of that institutional involvement. Obviously, we saw a lot of excitement surrounding this, but exactly how this has played out and the fact that it needs to take some time, right, to follow through. So what does that timeline then look like?
Well, I think that you've already seen institutions allocating, right? Mm-hmm. And so obviously having BlackRock and Fidelity, and I always joke that like Larry Fink is now the CMO of Bitcoin. He goes on TV and talks about a flight to quality. That helps. It's very similar to in 2020 what we saw with Stanley Druckenmiller and Paul Tudor Jones coming out and saying, look, I bought Bitcoin. That reduced that career risk for other portfolio managers. And so now what I think you're starting to see is people who have already been doing work. They're like, okay, the ETFs are approved. I see Fidelity and BlackRock. This isn't like a sideshow. This is important to them. They're really going to go do this. Oh, I just heard Hightower's putting money into this. Let's go do the work, right? And the work can be like, literally we're starting from scratch of like, what is Bitcoin, right? And like, how does it work? And let's go read the white paper and things like that. All the way to, hey, we've been trying to understand this for a while now. Now we got to go through our approval process. Let's go bring it to the investment committee. Let's go talk about it. And then even when you get the approval at the investment committee, you still, let's say you have financial advisors, they got to go talk to the clients. Right? And so you can imagine going and having the conversation. You may be starting that conversation with like, what is Bitcoin? Why is it important in a portfolio? Here's the research we've done. So there's a lot of work that happens. Now, if we look over the long period of time, call it 18 months, most of that work's going to get done. And so I don't think that it is ETFs get approved, $1 trillion flows in. But I do think that over the next 18 months or so, we're going to continue to see this persistent bid. Happens to line up with a bull market and obviously the halving that just occurred. And so it should push the price much higher.
Well, let's talk about the SEC, because Ethereum, this lawsuit accusing the SEC of considering it as a security, it was called a commodity. The founder now saying it was gaslighting from the SEC. What would you call it?
Yeah, look, America has this amazing kind of court system, right? And so I think that one of the things that the SEC has done a great job of throughout decades is when they think that somebody's doing something wrong, they usually go and they try to either negotiate a settlement or they go to court. And what we have seen time and time again is that the SEC historically has been on the right side of many of those cases. Mm-hmm. What has happened in crypto recently is a couple of people have said, well, wait a second, why don't we use the court system to go say, well, we think you're wrong? And the beautiful thing about America, not very many places around the world, but in America specifically, is that the SEC is going to send their best lawyers. The other groups are going to send their best lawyers. They're going to argue it out in court, and the judge or a jury is going to decide who's right and who's wrong. And so I think that I don't have a strong opinion as to like who is right or wrong. The facts are, if you read both briefings, they kind of have very different tale of what the facts are. But I do think that we've got to find some sort of solace in the fact that the court will decide this. Now, I always have told people in the crypto industry, like they want quote unquote regulatory clarity. Yeah. Just because you get clarity does not mean you get the answer you want. Right? And so, yes, you want clarity, but actually a lot of times when people say they want regulatory clarity is they're like, but we want it approved in the way that we want. Mm-hmm. And so I think that we will get the clarity. It's just people have got to be really careful here as to like, okay, if you get that clarity and it's not what you want, how are you going to change the way that you do it? And the last thing I would say is just like, if we don't get clarity in the way that I think the crypto industry wants, there is a very real brain drain. There are people who are leaving the United States, and so if we want to be the leader in this kind of innovative field, we're going to have to figure out how to do that, but also have these people operate within a set of rules.
How could the upcoming election impact that regulatory clarity?
Yeah, I think Trump has done kind of a 180. He historically, was very much like, I like the dollar, I don't like anything else. I think Vivek has kind of been in his ear a little bit about Bitcoin. I think at one point he was even on stage and he was like, basically like, Vivek just said it, I should say this out here. Kind of said, he was open to Bitcoin. It's unclear kind of what Biden's personal views are, but it seems like the administration is not as friendly to it. And so I do think that you're starting to see candidates, though, that show up, Vivek, RFK, et cetera, who are very pro-Bitcoin, pro-freedom technologies, et cetera. And regardless of maybe the like 70 plus crowd that is running for president today, it's a generational thing. And so what you're going to get is you're going to get people under the age of 40 or 50, like they're growing up with this, right? And so it's kind of like when our generation, there's people running for president, if they don't support the technologies that we grew up on, we're going to be like, you're an idiot, right? And so it's okay for the kind of the older generation because there's that generational gap. But I think just over the long run, old people die, young people replace them, young people grow up with these technologies. It's going to be kind of the standard.
How confident are you that we're going to get some clarity here?
Well, they have to get clarity at some point, right? Because basically what the crypto industry has done is they've basically pushed the issue, right? And they've just started launching things. They've started doing stuff. And so obviously if you're a regulatory body and you disagree with it, you don't like that. So you're going to bring enforcement actions. You're going to go try to drive clarity. Now, there's questions about should we be doing that through a legislative process or through an enforcement process? Again, that's for people much smarter than me to figure out. But I also think that what we are playing is a global game of competition as well, right? And so, an interesting data point is that the stablecoin issuers are now, I believe, one of the top 17 buyers of US Treasuries. And so when you look at that, you say, okay, well, it used to be that China and Japan bought 22% of all US Treasuries. Well, we got a pretty big federal debt, right? We're issuing a lot of debt, and so obviously we need people to buy that stuff. China and Japan went from 22%, now they're only 7%. So if they're going to stop buying, or at least buy less of these bonds, who is going to be the new buyer? Well, stablecoins have actually showed up. And so my prediction is that the stablecoin issuers collectively will end up being kind of top 10 US Treasury buyers in the world. If that happens, all of a sudden that is systemically important. Right? We need these people to buy this debt. And so I think there's a lot of nuance and intricacies here that we've got to kind of figure out. And you can't just bring a hammer down on an industry, specifically if they're one of the biggest buyers of US Treasuries, and it's a time where we're spending, like crazy people. And so it's how do you enforce rules, but also not kind of screw up the positive aspects. And I just hope that they get it right.
Well, it's really interesting, especially given the record-breaking auction that we have this week, which seems to happen every single time we've got these auctions. Anthony, thank you so much for joining us. That was Anthony Pompliano, Pomp Investments founder, joining us here in studio.